Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, December the 19th. The year is 2023. Let's talk trading. Never lose again with Walmal. These videos are for educational purposes only. Your results may differ from mine, different from Walmal's. Walmal reminded me that when I first started out, one of my taglines was "Never lose again." You want to tell the traders out there all about that, Walmal?
Sure, I can do that. It's kind of funny. When I first saw that tagline, I didn't know you at the time. A friend of mine went and pointed you out to me, and he was a follower of yours at the time, but in any case, he said that to me, and I said to my friend, well, that guy's off his stinking rocker. And of course you're going to lose. That's just part of trading. Anybody says that, it's just a bold-faced liar. But I really didn't, that was just me speaking off the cuff and not going and looking at what you're actually were saying. And the whole idea of what you were saying is we need to be consistent. We got to be consistent traders. And what I mean by that is that we got to be consistently winning. So that at the end of the week, at the end of the month, at the end of the year, we've got more money in the bank than we did at the beginning of the week, month, or year. And I think that, I don't want to put words in your mouth, but I think that's what you were really getting at. I don't think you were foolish enough to go and say, hey, I'll never lose a trade again. No, that's part of trading. You lose trades, You even have losing days. You may even have a losing week, But the thing is, what we need to do is become consistent. And over the years, I've thought about it, and, thinking about it in terms of, okay, is it just being consistent to never lose again? Is it more than that, or is it just being consistent? And I think I've come to the realization it's more than just being consistent. You can be consistent, and you can consistently even win, which doesn't mean you win every time, but over a period of time you win more than you lose. But the thing is, you also have to be able to sustain it. You need both. You need to be consistent, and you need to be able to sustain. And those terms, people think that they're the same or interchangeable or even similar, but they're not. They're actually slightly different from each other. The idea of being consistent is something that is reliable, stable. It just goes on and on and on, and you can rely on what the outcome is going to be more times than not. What's sustainable is this idea that it's the ability to maintain what your process is or your activity is. And what I mean by activity or process, your ability to trade. Because here's the thing, you can consistently win, okay, 80% of your trades, but you take that one loss, and that one loss can wipe out your account. Well, you were consistent, you're still winning 75, 80% of the time, but you're out of the trading game because you weren't able to sustain it. So you need both of the elements in order to never lose again. You need to be able to sustain it, and you need to be able to, consistently win. You need both sides of that coin, And so what does that mean? As for us as traders, it's the same thing that I feel like I beat a dead horse here sometimes, but it's the same thing. What are you doing in terms of your risk management? What are you doing in terms of your overall, money management? What are you doing there? How are you protecting your accounts? Because if you don't go and protect your account, you can't be sustainable. And the thing is, sometimes here's the thing that that really caused me trouble, still causes me trouble from time to time. The thing that can really get you into trouble is that if you're going to go and sustain, okay, and you're going to preserve your capital at all costs, my phrase, okay, then what it potentially is going to do is it's going to go and make your consistency actually go down. And so you got to find that happy medium with the way that you trade, where you keep your consistency where it needs to be, and you're able to sustain at the same time. And so that's my my 2 cents on the whole idea of never lose again. It always comes to, call me a broken record or whatever, but the reality for me is it all comes down to money management. I don't care what your method is. I don't care. I don't care. I don't care if you're trading horizontal lines, squiggly lines, some weird, exotic, made-up nonsense that you've come up with it, through years and years of observation. It really doesn't matter to me. What matters to me is this: are you being consistent, and are you sustaining your account? Those are the 2 things to me. In other words, what are you doing in terms of your money management? What are you doing in terms of your risk management? Because we talk about this whole idea, that you have a stool and you have to have all 3 legs of the stool. Well, the reality is, I think that sometimes some of the legs are a little bit stronger or need a little bit more emphasis than others, and those would certainly be managing your money. So that's my thoughts, sir.
Yeah. Yeah, well, I was remembering what had happened was when I came up with that, the thread was trend indicator, never lose again, back when I was still messing around with squigglies. And what had happened was I had looked at, I think it was like the 5-period moving average and 10-period moving average, or 20-period, I don't remember what. But what I hadn't looked at was like the 200 moving average, and the 200 moving average was pointing down and everything else was pointing up. And I went long and I got smashed. And so I built an indicator over on TradeStation where it would, I think if I remember correctly, I was using radar screen, which hardly, before I came along, it just didn't seem like anybody was using radar screen, because you go out to the post and nobody was posting about it or showing it on their charts. Well anyway, I had developed the multi time frame, multi indicator, kind of like my dashboard, the way I do it now, except there it was just, just for whatever stock I was trading at the time. So that's how that all came about. And then from there, I went on to do this more statistical analysis and came up with the buy zone, which I've got on the chart right now. And, we can see that, price went down through the short zone and came back up in that same M30. So maybe you got a couple of pips, and then it hit the buy zone. It meandered there. Then it went across the weekly open, which you can put a buy zone across the weekly open too. But normally, when I trade the weekly open, I just trade the crossover, and you can see it's up, a few pips above the weekly open that was at 26.71. So we're about 60, 70 pips above it. Right now.
Yeah, something like that. Yeah, we're good 60 pips above it right now. At least from my open, I'm 60 pips above it.
Right. So, that's where it came from. Where, when I started writing these indicators and dashboards, what would happen is sometimes when you do the old hairy hindsight, you go, oh, if I had only seen that, or I only paid attention to that. So that's using the computer to do the pay attention for you. And that's why I used to have like on the multimeters that I have, I'll have like all the candle colors across the time frame. So I can see right now, I'm looking at M15, but you know what, M30 is red, because that's what the multimeter's telling me. And so that way, in one glance, I can see, okay, I don't want to be long here. I want to wait and maybe pick up a short, because plus I'm in the rat zone, the upper rat zone, or red rat zone. Even though price is ranging at the moment, oscillating between about 46 and 32 or so on the M15 chart here.
that'd be consistent. If you look at the M1, it'd be consistent with that as well. And I think that's a legitimate thing to actually go and say, Hero, and it's important for people to understand that. We have all these methods and stuff, and, and the methods that work. It's sort of like, when we first got on the phone earlier, I had told you about how, I was able to go and make my core for the day, and it was more because I took the trades, and just you got to consistently take the trades because statistically that they're going to work out. But at the same time, you just pointed out this range that we're in right now. Yeah, everything was pointing green. Well, now M1 is now starting to point red, and M5 probably not on this candle, but potentially on the next candle will point red. And the reason why is because we're stuck in the range, unless, of course, it breaks the range. So if you wanted to go long, would it make sense to go long here? My opinion, no, unless it actually clearly breaks this range area. Just because you get, you have a method that says to go long, just because all the candle colors are saying go long, the reality is if you're looking at the chart, you say, wait a second, we're stuck in an area where the price is just going from one area to another area, back and forth. It doesn't make sense to go long there. If we had gone long at 45, which for me would have been an actual trade, the reality is if I would have taken a trade, I would have been hammered right now, and I'd be sitting here underwater by 4 or 5 pips, and wouldn't have been the smart thing. Meanwhile, back at the ranch, if you look at the chart, well, why would you go long there? It's failed 1, 2, 3, 4, 5 times in the last hour breaking that area. Does it mean it's going to stay not breaking an area? No. Eventually, it's going to break that area, either to the up or to the down. It's going to go break that area. But the thing is, why do I need to be on the bleeding edge of that sword? I'm willing to give up some pips and wait for my trade once it breaks out of that area. And I think that's sometimes where that can help us out in terms of methodology. It's just because our method says to go, we also have to use our brain a little bit and say, wait a second, if I got a green light, to go, but there's a Mack truck literally running in front of me. Do I go through the green light, or do I go and slow down so I don't hit the Mack truck? I slow down so I don't get injured. Even though, technically I had the right of way, but no, you don't run into traffic. You wait for the traffic to get out of your way.
Yeah, but it's funny because I popped up or switched over to M1 time frame, but if you go back and look at the M30, you can, this is one of those ones where, price was making higher highs and higher lows, but here it failed to get out of that previous M30 wick zone and then turned red. To me, it's like you might have a whole bunch of things that say go long. And what happens is, if you look for them, you'll find the reasons to go long. But there's a good reason. There's that one reason not to. It's like, hey, it's coming out of that M30 wick zone, upper wick zone, and it's going down. So it's like, you wouldn't want to be trading against that M30 candle color there.
Right. And then to add, insult to injury here, the reality is right now we have a daily range of 115 pips, which in the old days, so what? That's an average day or even a low average day.
Yeah.
But nowadays, that's big. I think we're running out of time, sir.
Yeah, we're just about, fastest 15 minutes trading's just about over. But, the whole idea, never lose again, most of your losses can probably be attributed to something that you probably either shouldn't have done or failed to do. And one of the things is, keep it simple. And that's just something that you're going to have to look in the mirror and understand. It's like, it's easy to go hindsight and go, if I would have taken this trade and this trade made money. But then in real time, do you take that trade? Or do you overthink it and then, let that opportunity slip by, win, lose, or draw? So, and that's why we have stop losses. So if you never want to lose again, then you can't lose big. Because remember, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.